Hello, hello, and welcome to Losers Become Winners for August 25th. With alphas getting a last bar low for PGR at 30%. Let's go look at those charts. There we are. PGR 30% right there. 30%. That gives us last bar low, which is the last bar was today's closing candle. And there's the low at 91.71. Last bar low, August 25th. Last bar low, exit 91.71. And also, too, point out, when you do these trades, as a backup to make sure that the order went through, just hover over the cursor over the bubble, the sell bubble, and you'll see right there it says 91.71 toward the end of it. It doesn't stay up very long, about maybe 5 seconds. So you got to look quickly and make sure you read it quickly. Make sure that's below 91.71. All right, that said, let's get on now to our next leader of the pack, and that's XLB. And XLB is right here. Now, notice yesterday it went through, closed below, touched below, but closed above, still in the game. And now we have a movement in the up direction. This is a call, so that's what we want to get move up. And our morning track still stays in place. It's only at 4%. Going on now to CBS, and CBS is, oh, there it is, bro. That was quick. Okay, CBS is right here. And now remember the other day, we hit price action here and stopped. Somebody up here has profit to collect off the $67. Came back down and hit it again and and now when you see this happen, come up this way and drop real quick, what happened, this had to be an algorithm. This is a computer generated offer saying that a price breaks above this line, whatever the value is. Now, this stuff is amazing how the price channel adds up to this. Now, we are in alpha. We are in the 30-day moving average strategy. We're just pointing out that the price channel becomes good guide rails and good indication of things happening. So that said, we have a put, and we're going in the right direction so we can get the decline, just like we had with the upcline with PGR. We might be able to get into a 30% last bar low for CVS. That takes us now to Raytheon. And Raytheon is interesting. Remember, we closed up. Here's a perfect example of sticking to the rules. It closed above the 30-day moving average. We set our stop, and then it closed right below. Now, it's a little bit in the danger zone because, again, this leg indicates that we had a lot of sellers sell, 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 stop, buy, 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 buy. And that's what happened here. So interesting action. Now, this is called a hammer. Now, when a hammer appears in a what they call a cumulative of prices, it's not significant as if appearing at the top or at the bottom of a price cycle. But we'll see how tomorrow will turn out. The week is still young. That takes us to XLE. XLEs we saw earlier this evening of what was happening over in the alphas. And this is the last Tug-A-War that's still in play. And the Tigers, now the Tigers looking for a call, and action went in the right direction, but then hit the 30-day moving average and bounced down and closed here, giving the advantage to the puts. So the Tug-A-War right now is an advantage to the put because it is in the negative side of the territory. Okay, finishing up. Now remember, Walgreen was a Tug-A-War. The Tigers did get stopped out for a loss right in here. So there we are. Try to get everything on the screen so you guys can see all this. Let me stretch this out a little bit more. Okay, so you see right there, this is what happened to the Tigers back on yesterday, the 24th. And here is on the 25th. Alphas are still in the game, and they are a put, and mice moved up, got close to touching to the entry point of the alphas, and then reverse. So giving us possibility that this trade still has a opportunity of getting to the end of the road there. Okay, we had two exits. Bad news happens. SLB got stopped out today for a loss of $55 per contract. 5 contracts, $275 minus $7 in fees, $282. with a 5 added to a 45.94 carry to a new O of 48.76. We're going to be around this trade for a long while. Anytime we have like 4-digit losses, those trades are going to take anywhere from maybe 3 to 6, 9 months, depending on how many opportunities we have in getting into the trade to be able to get back our money. Now, we do win back our money. You can go back and look at all the sites, look at all the ones with the Jersey girl and the red sweater guy. The red sweater guy are those who got the last trade got all their money back, and we ended up retiring those winners to the winner's circle. And that's what the winner's circle is about. We end up putting the losers become winners, and they end up in the winner's circle, and we don't bother with them anymore until we finish working off the rest of our lost leaders. Bank of America, here is Banky. Where are you, Banky? Here is Banky. And Bank of America had also an unfortunate situation. They were in a put. The close was here above the 30-day moving average. The exit order was put here, and boom, they got stopped out here right at the open of the bell in the morning, and they took a loss of $66, 5 contracts, $330 total for the loss of the trade, 7 for the fees, minus 337 with a minus 1785 carry for a new O of 21.22. Again, when you see these triple digits, you're going to be seeing these trades come over and over again until we're able to start grabbing some profit and profit. Rocks become pebbles, pebbles become profit, profit does payback. Okay, that concludes the alphas. Let's flip over now to the Tigers. The Tigers got Edison joined the group and immediately fell to 6%. So its stop was set up right in here. Let's see if we can get in this. No, we did pretty good there. And one more click to see it better. And here we are with Edison. And Edison is a call. It is a price channel, which means where our stop is right here. If price comes down and touches that green line, we're out. Things are not looking too bad. We have low stochastics, which means there's plenty of opportunity to run. And there's our criteria that we have. Now this criteria here on the open of the criteria for the option had to be changed, and it was changed in both accounts. And here's why: because sometimes in the options chain you find that the AB is too spread apart. That's the ask bid price. If it's more than 10% past the trade, and we're happened to pass ABs were bidding very wide at 1 in the money, but if we went 2 or 3 out of the money, we got decent opportunity. So this rule now has been eliminated. Well, actually, no. What is this? It says put the A ask bid less than 10% spread. Okay, there you go. There's our lesson for today. When you go and look at options, make sure that the ask bid is less than 10%. Some traders like 5%, so you have to find your niche. That is conclusion. Let's go now to UAA, and here at UAA, our stop is still here at the price channel. It's still at the price channel, and there's nothing much more. Now this is a call, so it's starting to creep slowly in our direction, and we'll see what happens in the next few days on that. Well, that is the conclusion of today's report for losers become winners, with alphas getting last bar low, but PGR closing at 30%. And with that, I thank you and take care. Good night.